Okay, folks, I'm going to start from the top. Andy Pedraza here with Special Effects Academy on the July 8th Forex Weekly Outlook in the Forex Trading Room. Our agenda this week is going to be slightly different. As of this week, we are combining the end of the week presentation with the kickoff, today's meeting, simply because we're handling at least two accounts, probably more in the future, and it's just getting a little bit daunting to have the results ready by 3 p.m. on Friday every week. So you'll see that we've added one agenda item the prior week. Everything else is as you would expect in this meeting: the currency strength meter, the fundamental announcements for the week, our analysis of the major pairs, any setups in progress, and a few parting words. In the update for the end of the week, we now have two ledgers instead of one. This is the long-term ledger that you're seeing right now. It is our long-term account, which we are handling based on our fiscal year, which started in April. So these are all the trades that have been open, closed, and or remain open as we speak on the long-term account. It's had a growth up through the end of last week with the closed trades of 26.84%, so almost 27% in the course of 3 months. That would be an average of 9% a month. It's only had 11 trades closed so far, of which only one of them was a loser, for a win ratio of 90.91%, and a total number of pips captured of 1,188.2. And that's about all I can say about that. Those are the results. These will be the trades that you can access via the copy trader, as well as our signal service, both of which you will have access to as a paid member of the Forex Trading Room. So if any of you want to sign up for any of those, if you haven't already, do reach out and we will help set you up. So again, this is the long-term trades, and now we will move on to the weekly ledger for the short-term account, which is the one that we have historically managed here in the trading room. So on the short-term ledger, basically a very quiet week. We knew going into last week that it was going to be a bit of a slow week, based on the fact that it did include the U.S. Independence Day holiday right smack in the middle of the week. That's a week that many people, including traders in the U.S., do take off as vacation time. So we had slower volume. We'll be able to see that in the currency heat map, which we'll be looking at in one of the next slides. But suffice it to say, we only opened 4 trades for the week. We closed 3 of them out. 2 of them were winners. 1 of them was a loser, giving us a 66.67% win ratio for the week. Basically a flat week. We ended up losing 5.1 pips overall for a growth of negative 0.48%. So essentially, we didn't do much of anything. We do have 1 trade open, which is that Euro-Swiss long, currently at profit. But again, until we close down that trade, there's no way of knowing exactly what is going to happen. But those are the results for now. Opportunities or lessons learned. As I said, it was a very flat, dull week with the U.S. holiday. We played it safe, and that shows in the results. Essentially, like I said, no win, no loss. We were there. We played a fundamental. We did this, that, and the other. But essentially, there was no significant change to the account. And of course, as I mentioned, on our carry, we do remain with the Euro-Swiss trade long open, and is in our open trades for this week. That covers the historicals. Does anybody have any comments or questions on that before we move on to our actual kickoff? Okay, then on that note, I will continue. What we're looking at now is the relative strength meter for today, July 8th. So we look at the week that just ended, which is the little graphic you see on the right-hand side, and then the week immediately prior, the week that ended June 29th. So we can see that that week prior had an extremely high volatility, close to 3% based on the movement, whereas this week, again, a flat, dull week based on the holiday, the volatility was about half of that. What we did see in this week is that the Aussie continued to recover this week that just ended, continued to recover against everyone except the New Zealand dollar. The Canadian was middle of the packet, did well against some currencies, did poorly against others. The Swiss was very near the bottom and depreciated against everyone except for the US dollar. The euro was very middle of the pack. The pound had a really good week again, except with the New Zealand dollar and the Aussie dollar, but against everybody else, the pound did appreciate. The JPY was close to the bottom. It did depreciate against everybody except the Swiss and the dollar. The Kiwi dollar was the overall winner of the week. It gained against every other currency out there, coming off a particularly bad week the week prior. So essentially, the Kiwi recovered. The US dollar was bottom of the pack. It depreciated against everybody for the week that just ended. And again, pretty much a given since most of the US was either not trading or trading at a very low volume due to the holiday. And again, coming off the week prior where the dollar had an outstanding showing, except against the Canadian. And at the end, we have silver and gold, respectively. I simply use these as a bellwether to see what's going on in the global markets outside of the currencies themselves. So this gives me a pretty good idea and a bit of an advance warning if there's something coming up on the horizon. But that would be our RSM, or relative strength meter, for the week that just ended. We have a relatively quiet week as regards fundamental announcements. However, on Wednesday, we have a major one coming out of Canada. That is the Bank of Canada's interest rate decision. This will be a very, very interesting day in market. Look at the forecast. Everybody expects the Canadian government to decrease the interest rate by 0.5%. That is a huge move. I'm not sure exactly where that number came from, but that is the general consensus in the market, based, I guess, on the statements that the Bank of Canada has been making for the past month or so in their different press releases and monetary reports. Be that as it may, that will be a very interesting announcement to trade live. So we will be trading it live. We'll be opening up the trading room that day on Wednesday, the 11th of July at around 9:30 a.m. U.S. Eastern Daylight Time. So half an hour before the main announcement. And we will keep that trading room open throughout 11 a.m. as the monetary policy report comes out, and 15 minutes after, there will be a Bank of Canada press conference. So that's going to tie us up from 9:30 a.m. my time through pretty close to noon. So it will overlap with the noon trading room. So likely I'll just keep the trading room open from 9:30 onwards through noon. So anybody that joins late or wants to join just for the regular noon meeting can do so. But the noon meeting will likely be very short, simply the aftermath of this Bank of Canada press conference. And if we do see anything else worth trading, of course we will. But the focus that day is going to be on Canada. Then on Thursday, early in the morning, we have the European Community Bank Monetary Policy Meeting accounts. That's also considered a high. That will be, of course, an announcement, likely in the form of a press release. I'm probably not going to trade this one. I'll decide later on in the week. But these tend to be a little bit of a dud since they're really not changing any interest rates or doing anything of significance. However, there is a chance that it will move the needle. So I'll make that decision later on in the week, probably after our Canadian fundamental trades. Based on how we do with that, I may decide it's been a good week and I don't need to bother with the Europeans, or indeed I may decide to have a quick trading session early in the morning for that. Then we have the CPI, the Consumer Price Index, excluding food, year over year, coming out of the US an hour after the European announcement, so 8:30 a.m. my time. This is one that I definitely will not trade. I rarely trade the CPIs. But again, we'll figure that out on Thursday. If I do indeed trade the European, then it might make sense just to keep the trading room open past the hour so that we can take a look at that CPI. But again, that announcement will be coming from me later on in the week, not just now. The one you can bank on is that we will be trading the Bank of Canada interest rate decision live. With that, we move on to our analysis of the charts. And on the, we'll start with the euro dollar. These will be hourly charts in this meeting. We did take a look at the dailies last week. What we see on the euro dollar is that we've now gone into a nice little reversal based on what the lows that the euro dollar had made last week and the weeks prior. So it definitely broke out of this channel. It's now making the higher highs. It has not yet returned to the level prior to that devastating fundamental announcement out of the European Community Bank back in middle of June, but it is angling and making its way there. It's got about 100 more pips to go as we speak, and indeed I may start trading this one up even as early as later tonight, depending on what I see happening during the open. If I do take any trade on that, anybody on the signals or the copy trader will get an alert that I did. Unfortunately, if you're just following the trading room, you're not going to get that that alert until you see the account tomorrow at noon. So be advised of that. Moving on to the pound dollar, we're looking at almost the exact same pattern as with the euro dollar. It's done a nice little reversal into pound strength against the dollar, but it is still shy of the level it was trading at prior to that fundamental around the middle of June from the European Bank. It is currently trading just the same as the euro dollar, about 100 pips off of that high, and you can see the gap. This chart was actually taken right after the market opened today, so you can see that it did gap significantly on the open between Friday and today. This is today's candle that started probably an hour ago, and it's already starting to move up. So this is another trade I may indeed take later on tonight. USD/JPY, trading flat, not doing much of anything. It has broken out of the upward trend line that it was following. It's broken out basically in a sideways pattern, so it is consolidating. Hasn't really picked a direction. I'll be keeping an eye on it, but I'm in no rush to trade this one as yet. USD Canadian looks to be about the same as our friend the USD/JPY, except it is heading in the opposite direction. So the Canadian did have a good couple of weeks. It started getting stronger against the dollar. It has now broken out of that downward trend on a sideways angle and lately resumed that drop into Canadian strength against the dollar, breaking through yet another trend line of support that was a little bit below where it was trading for most of last week. So another one I'll be keeping an eye out for, but let's remember with the Canadian that we do have that major announcement coming out on Wednesday. It looks like the market is already anticipating that there will be Canadian strength coming back after the announcement, and that's why this has been trading significantly down towards the bottom of the chart. That is a very dangerous thing for the market to think. I would really see no reason to expect that strength to come back regardless of the announcement. And this is simply the market getting emotional and trying to predict direction. Indeed, there may be a brilliant opportunity on Wednesday to trade this one all the way back up and watch it go up 200 or 300 pips in a matter of minutes. So we will be definitely ready for that to happen if it does happen. Moving on to the USD Swiss. USD Swiss has been moving in a little bit of a wide channel, but generally sideways. It's recently broken out of that channel and trading right at the top of the prior sideways channel. So it's in no man's land. It's in a little bit of a limbo. It is trying to give us a short signal on the hourly. We'll see how that one plays out later tonight. Again, this may be one that I will trade even before tomorrow's sessions, but I have not made a decision yet on this one. Aussie dollar. The Aussie dollar has also gone into a little bit of a recovery, the Australian against the dollar, with the Australian dollar trying to recover against the US. It's broken out of the downward sloping trend line, traveled sideways for quite a while. It's now done another bit of a breakout in the last couple of trading days, has yet to breach the prior high. If it does breach this prior high back here, then I would very likely be entering long on the Aussie dollar, trying to trade it back up for about 200 pips towards the top of this chart. But that's not yet. I will wait for that signal to actually be presented before I take it. Kiwi dollar. The Kiwi dollar and the Aussie dollar generally look very similar, and you can see that playing out here. It had a very nice downward channel, which has broken out in the last week and is now doing those higher highs and higher lows. It's also yet to threaten the prior major high, but it is heading in that direction. It's gone away from the upward trend line significantly. We may be due for a retrace to that trend line before it bounces back towards the top. But this is another pair that might give us a very nice opportunity to trade it up for 200, 300 pips towards the top of this chart. So another one on my radar for this week. Euro Swiss, and this is another trade. This is a trade, the trade that we are already in for the short-term account. So this is the one trade that we kept open from last week. We see that last week ended with us at a significant level of profit, and then we had a gap. This is today's candle. It opened at a significant gap well below last week's close, and indeed between the open and when I took this chart, it had already shot back up to where it was at the end of last week. So not sure what happened there. The Swiss strengthened against the euro for no reason that I can determine as yet. Granted, I haven't looked for a reason. I'm sure there's one out there. But the market quickly reacted and said, no, we don't believe that. And it went back up to where we are again at profit on the Euro-Swiss trade. So I'll keep an eye on it. But for now, we have that open trade, and I am not planning on doing much with it other than to make sure it doesn't start going against us. If you recall this trade, we did leave a very, very wide stop. This is a trade where our stop is 125 pips away, so very safely out of the way, but also very scary if it does start going against us. And our profit level is at the same 125 pips in the opposite direction. It's meant to be a little bit of a midterm. It's neither long-term nor short-term. It's somewhere in the middle. We're looking at one of these corrections to happen in the market. Moving on to the euro pound, and you will again see a classic example of the weekend gap and why it is very dangerous to stay in on the weekend unless your stops are wide enough that you're really not concerned. This candle here is where price closed out on Friday, and the gap in this case, and I am going to annotate this a little bit so that you guys can clearly see what we're talking about. The gap was this entire range. So it closed at the top, and it opened all the way here at the bottom. The gap was all that distance, and then it has started going back in the direction of last week's price. But this is a huge amount of pips for it to have gapped on the weekend. And if your stop loss was less than, had you been in on a trade with the euro pound with a stop loss of maybe 50 or 100 pips, it would have simply stopped you out as soon as the market opened, regardless of the fact that it is now traveling back towards the price that you had last week. Of course, if you had been in the opposite direction shorting this pair, then your limit might have been magically hit at the open and you're taken out with a profit. So you never know which way these things are going to go. But it is an example of why you need to be cautious on any trades that you leave open for the weekend. Okay, I'm going to clear that and move on to the next chart. The next chart we're going to look at is the Euro JPY. The Euro JPY is traveling in an upward channel with a nice little distance between the channel walls. So this is one that we may end up trading sometime over the week, either on channel bounces or on a channel breakout in either direction. But for now, it really isn't giving us much of a signal, so I'm going to leave it be. Euro Canadian, much like the USD CAD, the Canadian dollar was recovering against the euro, so we're moving into Canadian strength against the euro. That failed sometime next week. It broke out of the trend line and reversed to the bottom of the prior channel, bounced off of it, and is right now, in general, we can say it's trading very sideways along this line of support resistance at the 153.75. This is another one that I would be a little bit nervous about getting into, seeing as we know that on Wednesday we have that Canadian interest rate decision. Moving on to the pound JPY. The pound JPY had been trapped in a sideways channel, well, mostly sideways. It was trending upward, but at a very shallow angle. So trapped in that sideways channel for the better part of the last I'm going to say 2 weeks, and has now broken out decisively, and the pound is gaining strength against the JPY. We'll see if this continues throughout the week, in which case we may indeed trade that breakout. It's a little bit too early to tell. This is today's candle. Definitely impressive, but it is a candle that is only a few hours old, so I'll wait to see this evolve a little bit further before I think of jumping in. Aussie JPY. We had the Aussie JPY traveling sideways. Then a week or two back, it broke out of that sideways channel and established another sideways channel parallel to the old one. It has now since broken out, not decisively. It's trading right above the channel, but still, this is a valid breakout. And in essence, it looks to be Japanese weakness against the Aussie dollar, not to a very significant degree, but it is telling that we can see this moving steadily upward, and at this point we can say that it is in a breakout heading back towards the top. It does have a lot of room to move. It has about 200 pips towards the top, a little bit more actually, so we'll take a look at that as the week evolves. Moving on to the Euro New Zealand. Euro New Zealand, the New Zealand dollar was weakening against the euro like there was no tomorrow for a significant period of time, a little bit close to 3 weeks' time. It has since broken out of that upward channel and is traveling sideways, so I'll be waiting for it to pick a direction, up or down. I don't really care, but if it does break out of this sideways pattern, I will be much inclined to trade it. For now, it's just there on the back burner. Pound Canadian, yet another instance of the Canadian dollar getting stronger against the other side of the currency pair, and that having failed in a sideways fashion in the last week. So this is another one that I would exercise a lot of caution until Wednesday's Canadian interest rate decision. But we will likely be trading all three pairs, USD CAD, Euro CAD, and Pound CAD, when that announcement comes out. And that is it. That is the end of our charts to look at for the start of the week. A little bit of notes I took while I was looking at these charts the first time around and building this presentation deck. I see that with the dollar pairs, the market is still extremely volatile and uncertain, and USD performance still depends entirely on the news cycle. Whatever is in the news today is going to end up moving the dollar. Last week, there simply wasn't anything in the news at all. We were all on holiday and then burning fireworks and drinking ourselves silly, this, that, and the other, so nothing much happened. This is the week when everybody comes back. So do be careful with the dollar pairs. They're probably going to make up for last week's flatness and sluggishness. On the euro pairs, we can see that the euro is sliding back into weakness in general. And we may indeed be playing that out for the week of trading. The pound pairs, the pound is doing a recovery. I still think it's a dead cat bounce. Only time will tell. All I can say is that the pound had a really decent week last week. And as you can see from those opening candles from this week, that seems to be continuing. So definitely going to keep an eye on the pound for the week, but not just yet. I probably will not jump too hurriedly into any pound trades until at least a day of trading has gone by. The JPY pairs, you can see that they've been bouncing all over the place, and that's simply a reaction to the yen being the safe haven, mostly for the Europeans, to a degree for the Americans as well. So the pound tends to react sometimes inversely and sometimes with a vengeance when there are massive movements in the euro, the pound, and the dollar. On the Canadian pairs, as I said, this one is going to be the currency of the week with that key fundamental coming out on Wednesday. I likely will not trade the CAD at all until the announcement, unless, you know me, if I see something good, I'll trade it. But likely I'll be waiting for Wednesday to trade the Canadian pairs. And that is going to be it. As parting words, I just want to highlight that our copy trader is live. You do have the right to use it if you're a paid member of this Forex trading room or any of our other services. So if you're in Signals, if you're in the Elite Trader program, if you're one of my one-on-one coaching students, you do have access to the copy trader at any time. And if you haven't taken advantage of that, please get in touch with me. I will help you set it up. Just as a final little bit of bragging on the last quarter, the quarter that ended in June, our long-term account gained 27%. Yeah, I'm fudging it. It was 26.84 or whatever it was, but close enough to 27%. And the short-term account did gain 9.91%. Another one I rounded up to 10%. So you can latch onto these automatically by using the copy trader, even if you are not attending the trading room every single session. So take advantage of it. It's yours. We're happy to let you have it. Simply let me know, and I will help you guys set up. The only caveat to all that, you do need to have an account with a broker that allows you to trade via MetaTrader 4 or MetaTrader 5. Either one will work. But if you have a broker like Thinkorswim or one of the others that doesn't use MetaTrader, then sorry, but you can't use the copy trader. It's not that we don't want you to use it, it's that it does require MetaTrader in order to work automatically. So that is going to be it for me today. If anybody has any comments, questions, or anything else, feel free to unmute yourself and speak up.
Hi.
Hi, how are you? I'm listening.
Okay. Regarding the copy trader, can you? I think you have my email. Can you email me? Let me have an idea how it works.
Absolutely.
Okay.
Give me about an hour or so because I need to do something, and I will shoot you an email.
Okay. Thank you.
No problem. What you can start doing, if you open any of the emails we've sent out, including today's reminder for this session. At the end of that email, you'll see a link to a little bit of a manual. You can click on that link and start reading, but I will reach out later and explain to you how it works.
Oh, okay. Thank you.
No worries. Thank you so much. Anybody else have any comments or questions? Okay, then thank you very much. I will be talking to you again at noon Eastern Daylight Time tomorrow. Thank you for joining us. A recording of this session will also be up on YouTube within the next half hour or so, and you will be receiving an email with that link. And of course, mostly for the people that couldn't make this session so they can follow along. Thanks a lot. This is Andy Pedraza with Special Effects Academy signing off for today. Take care.